Best technical indicators for trading. There's a lot of opinions online about what works and what doesn't, and ultimately, you have to figure that out for yourself with just trial and error. Any technical indicator can work based on how you use it, but you don't want to be one of those people who smashes their chart full of technical indicators and makes it look like a drawing or a spider web, because that'll get you nowhere. So there are 3 technical indicators that I use that I believe are the best for me, and that's just been trial and error over a long period of time and just using these as a guide. You got to remember that technical indicators are lagging. Ultimately, when it comes to trading, how I trade, I'm a scalper. Price action, level 2, time and sales, our candlesticks are the most important. And then I use these indicators as a guide to confirm that thesis. My opinion on the best indicators to use are the 9 exponential moving average, the 20 simple moving average, and the VWAP. And I use that on an intraday basis. The reason why I personally like those is because when I can get an entry close to all 3 of them being together, that's where a lot of times big moves can happen. And then when price starts to get extended from those, from the moving averages and the VWAP, that can give me a good indication of, all right, I don't want to keep chasing, whether it be trying to short as price continues to get farther away to the downside from VWAP, or continuing to try to find a long once price gets really far above VWAP. Every now and then, a quick scalp short or a quick scalp long when it's a little extended, just because maybe it broke a prior technical level. And the trade idea for me, once again, always starts from the daily chart. So I'm using the daily chart to determine major technical levels, and then I'm using a 1-minute chart to try to find a really solid entry around those intraday indicators that I just mentioned to hopefully find some momentum to the downside or the upside. So just to go over an example, because it's one thing to talk about it, and then it's another thing to actually see it in work and how I use it. So just to go over Tesla, one of my favorite stocks to trade. So looking at the daily of Tesla. So Friday, Tesla had a green candle, bounced off the 20 simple moving average, looked like it had a possibility of starting to form a bottom. A lot of daily charts look ugly, so it's hard to anticipate that in advance, but just looked like, okay, maybe here is the start of this thing working its way higher, assuming the market is strong as well. Well, there was some bad news that Tesla got rejected from the S&P 500, that it wasn't going to be put in. That's not great news. I think a lot of people anticipated that. So now, coming in this morning, Tesla was down big, and it was about, okay, for me, what technical level can I possibly trade around to see if this can have some momentum to the downside? So now what I came in and looked at is this prior day's low. I'm sure a lot of people bought this day assuming, okay, Tesla has pulled back a lot. Let's give this a chance to maybe buy a dip and see if this can work its way back to highs. The low on that day was 372.02. So what did I do? Put a line down and I made it red, because when I'm looking to short something or there's a technical level to the downside, I make it red so I can see it on a lower time frame, and I make it green for when it's an upside, if I think it's a level that could create some momentum to the upside, so I can see it on the lower time frame. So 372.02. This was trading way below it. So clearly anybody who bought that day was underwater. Now it was just about, let me try to find a pattern. I have an opening range break and flag patterns that I like both to the upside and the downside. So I marked the pre-market low. So now this is where I'm using the indicators that I like. So let this thing dance around off the open. I don't want to try to anticipate anything. I really just try to let the pattern form and then let the indicators guide me as to which way this may go. Nothing is 100%, but I have a pretty high win rate just based on all the data and the type of setups that I like and what works for me. So let it dance around. It actually looked like it wanted to go higher, and I thought maybe this could work its way into the gap, because once again, this is another dip. Maybe people are wanting to buy the dip. Quickly failed at VWAP. What did it do? Consolidated below VWAP, got below the moving average, the 9 exponential moving average and the 20 simple. So that is telling me short-term direction is to the downside. You add in the fact that it broke that major technical level, 372. and it started to work its way to pre-market lows, 350.81. That's a technical level to the downside. This pattern was telling me, hey, I think Tesla may want to go a little lower. Now it was just about finding a good entry. And I thought below, because it wicked below 350, came to 350 again. To me, 350 was a major level. And I was also reading the tape and watching the level 2 time in sales. And 350 had a lot of size there. So I thought, if 350 can break, if we can get through a lot of those bids, I think that there can be more selling. So that's also where reading the tape comes into play. If I was just reading this technically, fine. But reading the tape gave me another little clue there that, hey, there's a lot of size at 350. And if we get through it easily, I believe there should be some downside momentum after tying everything else in together. So what did this do? Broke 350, below the VWAP, below the 9, below the 20. When these are all trading close together, a lot of times there can be big moves from it. So this broke 350, took out all those bids, and basically went straight down for like 13, 14 points. And then this is where I use these indicators to try to not chase and realize that I don't know how much more downside there is left. So this had a huge move down. Started to get extended from the 9, started to get extended from the VWAP. So this is where, if I wasn't in the trade, want to really pay attention to, is it worth continuing to chase this down? I've noticed that a lot of my big losers are from when I continuously try to take that new low once price is pretty far away from the moving averages and VWAP, because it's in chase territory. And if it doesn't follow through, I'm not going to be the only one who's jammed. So when people stop out, it can retrace pretty fast towards VWAP. And that's exactly what happened. So that was just an example on Tesla. Once all three of these indicators are trading close together, there can be nice moves that happen away from it pretty quick. And then a lot of times it can retrace back to it. That was Tesla. Let's check out Facebook. So a lot of these daily charts are not super clean. I'm a big fan of when there are very clean technical levels. There just wasn't the cleanest of technical levels. But as far as an intraday pattern, when it comes to these technical indicators that I use, can just give a good idea as to how I use it. So Facebook looked like it wanted to break down because it was breaking prior day's low. But what did it do off the open? It had a really strong push, came down to VWAP, held it. So when it holds VWAP and starts to move away from it, I immediately start thinking there's no reason for me to short. We're above VWAP. We're above the short-term moving averages. I don't want to fight that short-term trend. And then what did Facebook do? It started to consolidate towards the high a day. So this is a clear technical level. High a day is 275. Now, once again, just like the Tesla, but reverse. It breaks 275. Not super clean because it's immediately followed with a pretty nasty candle, but still above the 9 EMA, still above the 20 simple, still above VWAP, and they're all still close together. Breaks 275 and has a real nice move higher. Okay, that was Facebook. Let's go to one more. We'll go to Piton. Piton showed a lot of strength off the open today, and this one was a little bit cleaner. There wasn't a lot of charts that were super clean that had clear technical levels that I look for, like a prior day's high or a long period of consolidation or consolidating towards all-time highs, because the market just had a massive pullback. So a technical level on Piton, this is still overall in an uptrend. And what was the prior day's high? 84.97. But what did it do off the open? Had a nice push, pulled back, still no clear pattern, a little nasty as far as the trading. And then right here, buyers stepped up, big move, knowing that prior day's high was 84.97, and then using the indicators that I like to look at. Now it's just about finding a pattern. This was a bit of an opening range break, but price just went straight up, and I try not to chase. I like some sort of consolidation so I can use that as clear risk. Here's the next nice setup that I see right there. So major technical level, 84.97, prior day's high. This is a little extended, but it's not too far away. And it also has that technical level that could possibly kickstart some momentum. Here's a flag pattern right here. The first pull, it gets bought up off of 84. Now, knowing that that high a day is 85.13 and the prior day's high is 84.97, trying to anticipate it just a little bit. Maybe if I'm really good, I can get in 84.70s, 84.80s, risking off that pivot low. So that's a very clear pattern with clear risk, risking about 80 cents. And then what's it do after? Nice rip. And I'm a scalper. So this is not positioning for an all-day type of trade. I'm taking the quick move. If I can get this prior to that 85 break, using the indicators, using the technical level, goes through 85 and has a very fast pop up to 86.69. So getting about a point, especially on Peloton, quick point, in, out, that's a good trade. So those are just some examples of how I use the indicators. And once again, you got to remember they're lagging. So if you use an indicator without understanding why you're going to use it, you're not going to get anywhere. And you don't want to be like those people who have a gazillion different indicators on their charts because their charts look horrific and it makes it more complicated. And the last thing you want to do is make trading more complicated. So that's why I've only picked a few that work well for me. So now you know which indicators I like the best. Let me know which ones you like in the comments below. And remember, less is more. More indicators does not equal more money. If anything, it makes this whole process more confusing. Thanks for watching, and I'll see you later.